Hi everyone, this is Jitan from TradersTV. In the last video, we talked about price action patterns and some of the very best ones that you can be trading right now. In today's video, we're going to start talking about how to place a trade. This is where it gets really exciting. We're going to start talking about, and I'll be showing you, the revolutionary technology that Learn to Trade uses called the SmartCharts platform, which just makes trading a lot simpler and a lot more efficient. Today, I want to talk to you about risk management and placing a trade. We're going to discuss the key risk management criteria that you need to understand before you go ahead and place a trade. And I want you to see the difference between platforms where we had to play the trade historically and now with the advent of technology, just how much more simple and efficient it is using the SmartCharts platform. Okay, so the first thing to look at and understand is the 4 different types of risk that you need to know about. So the first one is trade risk and sizing. So how much should you be risking per trade, and how do you calculate that when you go to place your trade in the market? We also need to understand reward to risk, and we're going to have a whole episode dedicated to reward to risk, because understanding reward to risk will help you take more losing trades than winning trades but still make a return. That's the power of reward to risk. We'll also be looking at market risk and portfolio risk in later episodes. But for now, it's just about trade risk and sizing. Now, typically, most traders will risk between 1 to 2% off their account per trade. If you're a little bit more experienced, a little bit more advanced, then you may decide to up the risk with 3 to 5%. But generally speaking, if you first started especially, 1% is around the mark. That is the best place to start. Okay. So typically we'll be risking 1% on a trade and we'll be looking to make maybe a 1% return. That's a reward to risk of 1 to 1. If we make a 2% return, that's a reward to risk of 2 to 1. Okay. Now, typically, in terms of the formula needed to trade size on your account, there has been a couple of steps historically that you'll have to use to calculate this yourself. Because how much should you be in on a trade? So what is your stake? Should you be risking $10, $50, $100? So there's a certain formula that we use, and the formula is this. It's your account value, so whatever account value you have, 1% of that, you divide it by the entry price minus your stop loss. Okay, so the difference between your entry price and your stop loss is what we call the pip risk. It's how many pips or points you are risking on the trade. If we simply divide 1% of our account value by the pip risk, then that's the first stage of the calculation. So let's take it to an example before we start to look at the charts. So in the previous video, we discussed ring highs and ring lows, potential price action entries to get into a trade, depending on the market condition that you're looking to trade. So let's say, for example, we had a ring low set up here and we wanted to get into the long side on a particular market because we believed it was going to push higher. So we first have to find our entry price, and let's say our entry price is one spot 20.50. Then we also need a stop loss. So let's say our stop loss is one spot 20.10. Now the stop loss is the most important part of the trade that you place. The reason for that is because it controls your losses. So for example, if I place an order to get me long when the market penetrated the one spot 20.50 level, then once I'm in that trade, as long as it stays above to one spot 20.50 level, I'm in profit. But if it starts to come back below, and if it comes all the way down to one spot 20.10 and goes further lower than that, then I'll be stopped out at that price point. So I've controlled my risk. I know how much I'm potentially going to lose before I even take the trade. And too often I find traders, they're only focusing on the amount of rewards they can make. And I tell you, if you control your downside risk, first and foremost, the upside reward will take care of itself. The stop loss, hugely important. Okay. So let's say you found your entry price, you found your stop loss. So how do we trade size this to the account that we have? So let's say from an example basis, we have a $10,000 trading account. Okay. Well, if you're going to risk 1% per trade, then 1% of $10,000 is $100. So that's what you'll be risking per trade. Okay. Now, if we look at the entry price and the stop loss, the difference between that is 40 pips. Okay, so effectively we want to be risking 40 pips in the market, but we only want to be risking $100 of our trading account based on this example. So essentially, all we look to do is take the $100, okay, and divide it by 40 pips, and we get $2.50 per pip. So if I was in this trade at $2.50 for every pip, then the most I would lose on this trade is 40 pips, which will be $100 of my account. Okay. Now, actually, if the trade went up 40 pips, okay, then I would have made $100 in my account. If it went up to 80 pips, I would have made $200 in my account. Okay. Now, because of the way the Forex market works, it has its own kind of language and terminology, and a lot of the platforms and a lot of traders use something called lots. So essentially, you would have to take that $2.50 per pip, divide it by 10 to give you the lot size to place in your trading platform. Now, it does get a little bit more complicated if your account isn't in US dollars. If your account is in British pounds or euros or Swiss franc or Aussie dollars or Japanese yen, then there is another calculation to make, because then you have to do another currency calculation to make it relevant to your own trading account. And again, this kind of process, as you can see, it is quite time consuming. Before you even know it, whilst you're figuring out these numbers, your trade has already gone and you can't even get into it, right? So having tools to simplify this process is very, very important. It's going to be a life changer, a game changer to your trading, okay? And this is how we would do it historically. Even 12 years ago, when I first started trading, we had to work all this stuff out manually. I had to get my entry price, I had to get my stop loss, I had to calculate all these numbers by myself, using my calculator, using my journal, writing down all the figures, doing the currency calculation. Then I have to go into the platform, and then I'll have to put the entry price in, I have to write the stop loss price in, I'll have to write the unit price in, put my target price in, and there was a lot of different steps before I even got into the trade, okay? Let alone the analysis required to actually find the trade in the first place. So you can see how important it is to try and simplify this process. Because remember, your job as a trader is to identify the best market to trade, okay? Is to time the trade as best as you can. You don't want to get bogged down with all these different types of calculations and things like that, okay? So now I'm going to show you how the SmartCharts platform makes it so much easier, and how we're going to place a trade on that platform. So we'll look at the live charts and see if there's any trades going on, and we'll look to place that live in the market. So here we are with the SmartCharts platform. Right now we're looking at a chart of Euro against the US dollar. Now let's say, just for example, looking at the chart we have in front of us, I wanted to take a long position where we are right now. So many of you may have noticed we've seen a low test bar here, and we also have a low test bar here. These kind of price action bars was something that we looked at in the previous episode, so I encourage you to have a look at that if you haven't seen that yet. But let's say we wanted to get long of this bar because we believe the market was going to go higher. Of course, we'll do a lot more analysis before we even take a trade like this, but just for example's sake. So for me, the key criteria then is, okay, I need to know what the high of this bar is and what the low of the bar is. Because let's say, for example, if the market continues to push in higher, we could also have a ring low set up as well, again in the previous video. But if the market keeps pushing higher, then if it takes out that bar's high, that will be my entry price, and this will be my stop loss. Okay. Now there's a couple of ways to figure this out. Okay, and I'm just going to hover over the bar there, and I can see the high is around 1.1779. Okay, so let's say I wanted to get long on this at the level 1.1780. So when the market gets to 1.1780, I want to get into the trade, and all I simply do is go to the left hand side here, and you can see we have this terminal. Okay, I'm in a manual terminal right now, which means I can manually place trades, and it gives me all the things that I need to place a trade. Okay, all I need to do is fill in the box. So I want to buy it, and I need to put my entry price in. It's at a fixed price, 1.1780. Okay, fantastic. Now I just need to work out, okay, what's my risk percentage? So do I want to risk 1% of my account? Do I want to risk 2% of my account? 0.5%, 3%? So this is your risk percentage. okay, then all I need to do is put my stop loss. So if I work out what my stop loss is, let's say it's around the low of this bar, let's say it's 1.1729, okay. So if I put in 1.1729 as my stop loss, then I've pretty much got everything I need. You know, I have my stop loss in place. Now we may set a target as well, so we could even set a target price. Let's say if we just scroll down, we could put a trading stop loss, we could put a take profit, and we could put an expiry. Okay, so if the trade doesn't trigger by a certain date or time, we will just automatically cancel it. But let's say we thought the market had a very high probability of coming up to this high point here. So let's call that 1.1893. So just reading it off the right hand price level there. So take profit, fixed price, 1.1890. Let's put it around there. So basically, all I've told the system is, hey, I want to get long on the euro against the US dollar when the market penetrates that level, but in case I'm wrong, have a stop loss here to get me out of the trade so I only lose 1% of my trading account on it. But if the market does go in my favor, then get me out at my take profit, yeah, to bank my return, right? And then quite simply, all I will look to do is place that order. And it'll just say confirm order, just in case I get a few bits wrong, just to double check the position. And what you'll realize is that it already works out my trade size for me. I don't have to do the whole calculations and things like that. And this is a British pound based account, and I'm trading euro against the US dollar. So there'll be another few currency transactions, more than we just looked at before we took this trade. Okay, so it really works out everything for me. So everything's just a lot simpler. Let's say I press OK. So you won't get this window. All the traders here on the SmartCharts platform, we also send out our trades for people to view. And essentially, you can see now, here's my buy stop there. There's my stop loss in place, and there's my take profit already in the system. Everything's automized, systemized. I don't need to worry about anything. So you can just see how simple that process is in terms of placing a trade. Now, I'm actually going to show you a way to make it even more simpler for you. So here we have one of our strategies already on the SmartCharts platform. Now, if you recall in the last video, we were looking at high test and low test bars, and what you'll see is you can actually see there's a high test bar here suggesting we could be seeing some further downside, and that's also why we have an arrow popping up. Okay, and you can see here in this whole move to the downside, we have these arrows just popping up telling us when a potential trade is likely setting up, and our job is to determine, okay, do we want to take that trading opportunity or not? Okay, now if you look at this platform here, it's telling us to trade to the short side, and already everything's already customized for me. Okay, blue dot is where the entry price is, the red dot is where the stop loss is, the green dot is where the take profit is, and I don't need to do anything else. We can see on the left hand side here, okay, I can adjust my target price. Right now it's at a 1-to-1. If I wanted to target 2-to-1, then I can target 2-to-1 on the trade, but everything's already customized for me. All I simply need to do is hit the sell button. It already pre-populates the figures, press OK. Again, you won't get this because it's only for the traders who are on the platform sharing trades with you, and I'm in the trade. That's it. It's simple as that. I'm in a sell order here. Okay, my stop loss is here, and there's my take profit. Okay, the market comes down to this area here, then I've made my profit, my 1-to-1 profit. If it comes up to this level here, then I've lost my 1% profit. Okay, so that's just how simple it is actually placing an order on the SmartCharts platform. Your job is just to use your technical tools and analysis to decide whether you actually want to be in the trade or not. So as you can see here in the trade terminal, we can see the trade is live, pound against the Canadian. We were selling it, and there's the current trade right now. Yeah. So it just needs to work itself out. Here's a couple of trades for the previous day. Right now we just got into this trade, so just got to give it some room to breathe. Okay, starting to go kind of in the right way, but again, the trade is there now, our entry price is there, our stop loss is there, our target price is there. we don't need to worry about anything else. We just need to go ahead and look at other trading opportunities, okay? So just flicking between red and green there. The last thing you want to do is sit here looking at your trade the whole day. You're in the trade. You've made the decision, you did your analysis, everything looks good. So now you just focus on something else. And the great thing about the platform is there's loads of different things that you could be looking at here. So let's have a look at the platform a little bit more in detail and you can see what I'm talking about. So the first thing that we can look at is actually the scanner. So there's a basket of different strategies here suitable for different market conditions. And it's actually telling us when a potential trade is setting up. Okay, so they'll be using a combination of market conditions, price action, indicators and things like that to suggest potentially a trade is setting up, and then you just need to go in there, decide whether the trade is for you, do your own analysis, your discretionary analysis, and then it's as simple as just hitting the buy or sell button as we looked at before. So your job is just to focus on the trading part of it and not get too bogged down with all the numbers and the calculations and things like that. So it's just a great tool to become a little bit more efficient with your trading. Of course, you've got to understand the strategies and things like that, but a lot of it is simplified, so it just makes trading that much more easier. Okay. Now here's the scanner. You know, there's trade alerts here, so different traders posting out different trades where you can see what other traders are trading as well. We've also have this Connect platform, where great learning educational tool where it has all the different tools that you need to get started. You know, live videos explaining the platform, you know, the strategies, you know, basic market conditions, all the technical tools you need to know to trade. You know, we've got these live videos here, so you can constantly learn and constantly advance your own trading. We also have the SmartCharts live area as well, where you can actually see live traders talking through the market. Okay, in the European and the Asia session, you can look at their trades, see how they're trading, see how they're thinking as well. Again, we've got all the strategies here. You can just see how simplified the platform is, and it just makes trading just that much more easier. Now, one of the benefits of the platform as well is that yes, you can use systems if you want to, but you can also enter trades manually if you want as well. Okay, and that was the first example we looked at. We've also got a really good breadth of different markets that we can trade. All the different currencies here: US dollar against the Swiss franc, US dollar against the Canadian dollar, you know, Euro Oz, Euro Yen, Euro dollar, pound crosses, Aussie crosses. But it's also great we've got the indices to trade as well. Okay, because indexes right now we can see major stock market rallies in the US, European markets, Asian markets. Definitely something you want to catch on. Again, the key is to diversify. How can you create different income streams from your trading ability, from your trading skills? Looking at different markets is just one way to do that. So that's the SmartCharts platform, and that's a little bit more insight in how we trade size and how risk management is just so important.
Thanks for watching this video. In the next video, we're going to be talking about one of the most important things about trading, and that's risk management. Specifically, we're going to be talking about reward to risk and win to loss percentages, and how you can still make money even though you may lose more trades than you actually win. If you're interested in learning this in more detail, I encourage you to visit the link below and attend one of our free Forex trading workshops. In the meantime, I'm going to catch you on the next video.